Hi everyone, welcome back to my channel. I'm Dean Aronovich and we're back for another video keeping you in the loop with what's happening in the commercial real estate market. If you're investing in the Greater Toronto Area's commercial real estate market, the first quarter of the year is bringing some massive shifts you need to know about. Overall, Ontario's commercial real estate market is showing signs of stabilization. Despite a slight dip in total investment volume to $16.2 billion in 2025, which is down 8% year over year, we are seeing remarkable recovery driven by defensive sectors. Today, we're breaking down the data, the major deals, and exactly what you need to do to stay ahead. Let's start with the big picture. Where is the money flowing? Retail is actually the top performer right now, leading the recovery with $2.4 billion in investment, a 16% increase year over year. The stars of the show are food-anchored strip malls, which remain incredibly resilient against e-commerce, pushing retail vacancy rates below 2% in strong submarkets. A perfect example is Armadale Square in Markham, a fully leased grocery-anchored retail space that recently sold for $58 million. Next up is the industrial sector, which saw $5.3 billion in investment last year. The industrial market is stabilizing, with vacancy rates sitting tightly between 3.2% and 4.8%. While there is strong demand for logistics, investors are showing some caution regarding new supply and potential trade risks. However, rents are soaring, sitting between $12 and $18 per square foot and even spiking up over 17% year over year in certain prime spots. We're also seeing massive flips, like the $235 million purchase of a 745,000 square foot LEED Gold warehouse in Brampton from Unilever. Now, what about the office sector? You might think it's struggling, but we are actually seeing sustained growth driven by return to office, or RTO, mandates. With banks and provincial governments pushing for 4 to 5 days a week in the office, Class A office space absorption has doubled its historical average. Downtown Class A vacancy is currently down to 13.7%, and major players like RBC, CIBC, and Wealthsimple are renewing and expanding their footprints, taking up roughly 500,000 square feet. A major benchmark deal perfectly illustrates this. 70 York Street in Toronto recently sold for $134.6 million to Desjardins. Let's pivot to multifamily residential. This sector is facing some hurdles. Multifamily properties are currently dealing with supply pressure and rising vacancy due to a condo overhang. Despite this, cap rates are remaining stable, with GTA Class A properties sitting between 4% and 4.5%, making multi-unit residential the leader in market stability. To put things in perspective, a 339 unit building at 6 Silver Maple Court in Brampton recently closed for $115 million. You also can't ignore the new rules of the game for 2026. First, Ontario has officially set the rent cap at 2.1% for 2026. Second, Bill 60 took effect on the 1st of January 2026, bringing critical updates to the Construction Act. This bill changes lien timelines, holdback rules, and contract terminations, while also speeding up planning through amendments to the Planning Act, add in the recent capital gains inclusion rate hike, and developers and investors have a lot of new red tape and costs to navigate. So, what are the actionable takeaways for your portfolio? Number 1, prioritize Class A office and industrial spaces, as well as grocery-anchored retail, and make sure you start your lease or sale searches 6 to 12 months early. Number 2, if you're targeting multifamily properties in the GTA, look for stabilized assets at 4 to 5% cap rates, or look to secondary markets for better yields. Number 3, you must factor Bill 60 into any new development deals and lock down defensive assets to protect yourself against ongoing trade volatility. The GTA real estate market is definitely shifting, but there is plenty of opportunity if you know where to look. If you find this video helpful, do not forget to like and subscribe for more deep dives into the commercial real estate market. If you're exploring opportunities in Toronto's evolving commercial market, let's connect. Contact me and let me help you find the perfect space for your venture. Thanks for watching, and don't forget to like and subscribe for more deep dives into the commercial real estate market.